President Trump pledging to lower prices, but given this week's surprising CPI number, inflation may prove to be stubborn. The Wall Street Journal's chief economics commentator, Greg Ib, wrote about the issue and the challenges ahead. He joins us now, and that is, the buck stops here, Greg. There's no doubt. I know what you're saying. This is Trump's problem now. I don't think that, obviously, I don't think he caused what we saw for those January numbers. But there is some stuff left in the pipeline that is, we know how tough that last mile can be. It's bad if it was the last mile and it's now a mile and a quarter when it's actually might be headed the other way for 3 straight months.
Yeah. Let's make one thing clear. Nobody is blaming Trump for these numbers. The last January inflation number happened on Biden's watch. And we know that all the forces at work now happened in the prior 4 years. So even if there is inflation left in the pipeline that we'll see in the next few months, it would be misplaced to say that Trump somehow bears responsibility for it. But the reason I think it's a problem for him nonetheless is because it kind of casts a shadow over everything he wants to do in the next few years. He wants to raise tariffs, and we know those are on the margin inflationary. He wants to cut taxes. If they're not fully paid for, that also could add extra demand and inflation pressure. And the thing is, Joe, 8 years ago, he did the same thing. He cut taxes, he raised tariffs. But at the time, inflation was below 2%. So you could make the case that those steps actually helped inflation come back up to help the Fed meet its 2% target. You're now starting out with inflation at around 2.5% to 3%. And so these agenda items are pushing inflation away from the Fed's target. That's really the core of the issue.
Pretty interesting to think. Yeah, in the first Trump administration, we hit our goal on inflation. We got it up to, that's fundamentally different than trying to get it down. And you say 2.5 to 3. There are some people that think it really is 3, which is way higher than 2 and unacceptable. You can't move the goalposts if you're the Fed. You can't move it to 3. You can't.
Well, exactly. In fact, I think that Powell, the Fed actually in their last meeting said they're going to do their 5-year review of their long-term goals this year. And one thing that is not up for discussion is the 2% inflation target. And I think that's partly because they've realized over the last few years that people really, really hate inflation. And keeping that inflation number down and around 2% is really, really paramount. Now, I don't want to hit the panic button here, Joe, because my view, and I think the Fed's view, is that what we're seeing now is a residual effect of things from the last few years, and that all else equal, we should continue to see further progress on the inflation numbers later this year. Just because you're seeing some of the high numbers from a year ago drop out, you should start to see the Fed's own preferred measure of inflation get down to around 2.5%. It's what happens after that that's kind of up for grabs, and where things like the outlook for tariffs, for oil, for tax cuts, for labor force, given the immigration policies underway, all those things start to come into play.
Is there anything other than Doge that could be deflationary, Greg? And we had Jeff Curry on yesterday. He's a great oil analyst. He said we can say drill, baby, drill, but it's really going to be tough to increase that. I mean, I could see, and I'm not sure that the oil industry wants $40 oil or $50 oil. So I don't know if we get cooperation there. But tariffs, whether they come or not, you'd have to say maybe inflationary. Immigration, as you say, inflationary. Deficit spending, if you extend the tax cuts and put all the other new tax cuts in there, I don't see how that wouldn't possibly be inflationary. And I agree with you. I think Trump's got an inflation problem for the midterms, not now. And I don't think anyone is going to say bird flu is Trump's fault, and that's why Elizabeth Warren, obviously, any chance she can get for dissembling, but egg prices are not Trump's fault, but he's going to be blamed for not bringing them down.
Look, you can make the case, Joe, actually, that if this is the peak in things like eggs, that actually prices will start to go down now, and Trump will be able to actually look back on a period of flat to falling prices a year from now. So the picture's really not all that bad. I agree with you on the oil price situation. The paradox is that the only way you're going to get the U.S. oil patch to drill more is with substantially higher oil prices, right, which is, of course, exactly what Trump does not want. But there's a potential offset here. As we know, he started talking to Vladimir Putin about ending the war in Ukraine. Obviously, part of Trump's hopes is that this could lead to an end or at least an easing of sanctions on Russia. That might put more oil on the market. That could help bring the price down. As for the tax cuts, well, the House Republicans are making brave sounds about big cuts in spending. And if they're big enough and if they're front load enough, that could take some steam out of the economy also.
I wonder about the Fed, Greg. Do you think there'll be another cut, or do you think the next move is a hike?
I don't think the next move will be a hike. I think that cuts have been substantially delayed, possibly until next year, partly because I think it's a matter of precaution. The Fed would like to make sure that some of these risks that we're talking about work their way through the pipeline. And if you look at the state of the economy, there's no rush. I mean, there was an air pocket in the labor market 6 months ago. I think that sort of panicked a lot of people. The Fed began its easing cycle with a big 50 basis point move in an effort to try and get back to neutral more quickly. It turns out that the labor market is coming back. It looks fine. And, you don't really see, we'll get the retail sales numbers in a few minutes. I don't see any reason why the Fed should be panicked and cutting rates because the economy is weakening. So I think they've got the ability to be patient. But my bet would still be that the next move is a move downward, not upward.
Do you think that corporate confidence or animal spirits, is it a tangible thing if you deregulate a lot of sectors of the economy and maybe you cut government spending eventually? Could that keep things positive in the markets for the next year? Is there anything to that we have a business-friendly president now and a lot of stuff that was a headwind under the Biden administration could now be a tailwind? Is that possible?
I think it's not just possible, it's probable. I mean, we've seen like the share prices of major banks like Goldman Sachs go up a lot precisely because they're expecting more deal activity. The problem, of course, is that things like the uncertainty over tariffs are kind of like working in the opposite direction. So in fact, the last month was actually kind of quiet for deal activity. I think the bigger issue, though, Joe, is that we know that these regulatory supply side moves, they just work their way through the pipeline very, very slowly, and they're very hard to pick up in a measured way. We know they're there. They're just kind of intangible. I think that if I were to say that there was one kind of black swan out there that could really work in the Trump administration's favor, it would be surprising resilience and determination on the part of congressional Republicans and the president himself to really get spending down. And in some sense, that could actually be the best of all worlds, because you get that takes a little bit of the pressure off of aggregate demand. And so it's sort of like tilts inflation risks downward. It might also start to bring deficits down, or at least stop pushing them upwards. You get long rates that start to behave better, and maybe you finally get some relief on mortgage rates. The final thing that might actually do is take some of the air out of the dollar. And we know, of course, that Trump cares a lot about the dollar because it's a major factor of driving the trade deficit.
Cares about it how? Does he want it to go up or down? I'm not convinced he necessarily wants it to say that's strong, right? They never admit it. But
well, exactly right. So, right, he wants it to be the reserve currency, but he also wants it to be weaker. I mean, it's not impossible to have both those things. We've had a reserve currency for 75 years now, and there are many periods of strength and weakness in that. But on a cyclical basis, you could imagine a scenario where the spending cuts really are quite severe. They help sort of take some of the pressure of long-term interest rates and the Fed, and that maybe sets the stage for the dollar to weaken somewhat.